All right, hey there. Good morning, everybody. It's a few minutes after 11 a.m. Central Standard Time here on Friday, the 4th of February, 2022. My name is Christopher Inks, and I'm with Texas West Capital, coming at you live from just north of San Antonio and Boerne, Texas, where we are iced over. But fortunately, that's all we got. People up north side of Texas, even just a few hours north of us, getting snow and everything. Power outages, I think it was around 30,000 just north of us. So we're fortunate where we are right now, but I sure as heck am not driving on those streets today. So hopefully you guys are doing all right. What a morning, right? We had the jobs report, non-farm payroll come out this morning. Huge surprise to the upside, guys. I guess we can just say stop listening to ADP. Remember last month, ADP was expecting this large surge in jobs, and we didn't get that. This month, they were actually expecting a negative number, and here we are, hugely upside. Consensus was for about 150,000 extra jobs. We got I think we got about 461,000, I think. 467,000, yeah. So huge to the upside there. This coming just after ECB comments, Lagarde and them over there at the ECB stating that, earlier this week stating that that they didn't have plans at the moment to raise interest rates before the end of the year, but that they were going to stop that emergency bond buying. Lagarde and them still saying that their economy compared to the U.S. Is still really weak and really, weak. I can't think of what I started to use. But anyway, so, that set the euro rallying up. And then, of course, we got the news today, which sends it back down. What else? Bitcoin popping out this morning. If your big influencer told you, hey, we're going down lower, stop listening to them, guys. Man, I've been keeping Discord up to date with what we were looking at. We'll talk about today about all the things we've been talking about, but we were prepared for this rally this morning. So if you weren't, you listen to the wrong people. I keep doing this, man. I keep doing the opposite of what everybody else is saying and end up working out okay. So we'll see what happens, right? Anyway, so we got that and so much more to talk about today. Hopefully you guys are doing all right. Don't go to howtotradetowin.com. Don't go there. Next week, we're going to be releasing or launching the texaswestcapital.com site that we've been putting a lot of work into. I also mentioned that I had a big announcement, a new service we were going to add today. So I'll go ahead and tell you. We're going to be. This is something that I had said that I probably wouldn't do, just because it leads itself to traders. A lot of new traders coming in because they want the easy way to trade and whatever. They want to be told what to do, but not really understanding risk management and how to properly trade. But I have, over the last year and a half, been working on a variation of my own trading system that I use, that I've put together over the last 25 years. And so I've created a variation of it that seems to be working pretty well. It's got like an 80, right now it's got about an 83% win rate. And so what we're going to do, guys, is we're going to launch a... I hate the word signal service. That's more or less what it is, but not like what you're used to, guys. Most signal services out there, they say, listen, usually right when it happens, go buy now, sell now, whatever, all that silliness. No, what our system does is we give you a heads up. Usually there's a lag time of about, 12 to 24 hours before it breaks through. It just depends on the market. Sometimes it might happen sooner. But we give you the entry level, we give you the stop loss, we give you your take profit. We tell you when we give you that signal when you need to move your stop loss up to break even. We give you all this information, but more importantly, you're also going to get a mini course on risk management, on proper risk management, and a mini course on proper leverage trading. Again, the idea is to give you, and then we're also going to have an intro video that explains how the system works, how you read it, how you use it. There is nothing left for you to really screw up unless you don't listen to the stuff. So we're going to do that. We're going to launch it next week for our current TWC members. And then sometime probably during that time, we'll go ahead and launch it for everybody else as well. But lots of exciting stuff. It's going to be crypto. It's going to be stocks. It's going to be futures. It's going to be Forex. We're going to look at doing precious metals and commodities as well. So whatever your flavor, it's in there. You can pick and choose what you want to get there. But anyway, we're going to do signal services correctly, guys. So it's pretty exciting. And, again, would not have done this if I didn't think that I could make it work for even the newest traders. So, in full TWC fashion, it's all about the education. It's all about helping you become a better trader, not just giving you buy and sell signals, right? So it should be interesting. It should be interesting, guys. Like I said, it's a variation of my own system that I use as it is right now. And been working on it for about the last year and a half. And so we're ready to kind of go public with this. So exciting times indeed. But definitely not something that we just kind of put it out there and leave you to flounder around and trying to figure out what's going on and how to do it. All right. So there it is, guys. That's the big announcement. It's exciting times. We do have a few other things we're going to be releasing this year. Some things for our TWC members, some things, additional services, other things, free things for everybody. We got a lot, guys, man. TWC is growing into this huge kind of just this main resource for trading. And you guys, I think, will be really excited to see all these things we got coming out to you, okay? All right, guys. Who's here already? Bamboo, what's up, man? Hank is checking in from, I know I'm not even going to pronounce that correctly. I've never even been to Thailand. Is that Khao Lak? I think that might be. I might have screwed that up. Probably screwed it up. Jared the Great, what's up? Claudio Nevlusian, Blaze, man, great to see y'all checking in here. Spiral Architect, Keith, what's up, man? He says, hope everyone caught the long. I hope so too. Devin, what's going on, man? Devin said that. Bianca, hello, Bianca, good to see you. Yeah, Hank, you would think Hank would be getting bored with the good life, right? I don't know. Data's here, Block Tech, good to see you checking in as always. Blaze just shaking his head in Biden's speech. The funny thing is, again, guys, the government has little to do with a lot of the employment stuff and whatever. Especially directly. I mean, they have some ancillary kind of effect on it just based on their, moves they make. The government and the Fed and all that. But, they're going to get in there. They're going to try to take credit for it. The economy does well and the president comes in. Look at what I did. Economy's not doing so well. It's not my fault. It was the previous president, right? Oh, it's always something. Devin says, snow? What snow? Florida is where it's at. I know, right? Oh, man. I tell you, Texans before last year, when you said snow, they're like, hey. Ever since last year, they're like, wait, what? That whole ERCOT, our grid controllers there just really screwing things up prior to last year. Fernando Olivas, what's going on, man? I hope I didn't screw that up. Good to see you. Brian, what's up, man? Andrew checking in here. He says Friday breakout. I like it. Yeah, for Bitcoin there for sure. What's going on, Diego? He says, very interesting day, very eager to listen to my thoughts. I don't know that they're all that important, but I'll give you guys my thoughts anyway. Hank says 42K remains the meaning of life. I like that. Mark checking in. What's up, man? Let me see here. You guys are too much. Wazobia Dollars is here. Always good. Fernando, I appreciate that, buddy. I just do what I can do, man. Nothing special, right? I'm just a guy doing a thing. It's really all this is, guys. It's like anybody else who's been doing their particular trade for a while. You kind of, you get better at it the longer you do it, and you learn those downfalls along the way, and you learn the importance of doing things a certain way. Yeah, that's all. But I appreciate you. JR says trying to stay warm in Houston. Oh man, got a buddy of mine over, a real good friend of mine I've known for years and years and years, decades. Trying to get me to move on over there. Who knows? Maybe. If I do, it'll probably be the north side. Tomball Spring, maybe somewhere like that. Jeff Bear, what's up? He says, craziness on Bitcoin with risk-off environment in the indices. Yeah. So anyway, like I said, don't go to howtotradetowin.com and do that, guys. I mean, if you do, we'll get you transferred over next week, sometime next week when we get the TexasWestCapital.com site launched. But you can wait till then as well, unless you just can't wait, unless You know, you missed this morning and you wish you had been aware of it. Hint, hint. With us, right? So anyway, here's what's going on, guys. Nice big move here. And so prior to this, you know, I talked to Discord about this range here, right? And I talked about the fact, as you can see here, we had the volume drop off here in this range. We were making higher highs and potentially higher lows. We were finding support around the 1 hour pivot. So all this stuff kind of leading to the idea that we may just head higher there. And once we broke out of here, the idea was that we were going to rally pretty well up toward the descending channel resistance, which we're doing. Now, I had two possible counts. We had one we were looking at as maybe a 1, 2, 3, 4, 5 as a leading diagonal. However, and then the other one was a 1, 2, 1, 2 that you see here now. Now, my problem with the leading diagonal is that wave 3 here, if that had been, is shorter than wave 1, which means wave 5 should be shorter than wave 3, but wave 5 is not shorter than wave 3. I don't think it is. Let me go check. Let me just verify real quick. Make sure I'm not feeding you guys a bunch of malarkey here. Let me see. Yeah, no, see, it's greater than wave 3 there. So, you know, if it's a diagonal, if it's a leading diagonal as a ascending wedge, then wave 1's going to be your longest, wave 3 is going to be your middle, wave 5 is going to be your shortest. If it's an ascending broadening wedge, wave 1 is going to be your shortest, wave 3 will be your middle, and wave 5 will be your longest. But like I said, in this case, this wave right here is larger than this wave right here. So I've got a lot of issue with that potentially being a leading diagonal there. So we're going to look at this as quite potentially a 1, 2, 1, 2 here. If so, you know, you have basically your 1, 2 as a flat here, and you work it up here. You might be able to get 5 up here. The length, the strength, the large candle spread, the volume on that suggests that this is a wave 3. So I've worked it into this being a wave 1 and 2, wave 3 up here around where it's at. Wave 4 pulls back toward the daily pivot. Wave 5 comes on up here toward this 42,293 area, and that just gives you then your wave parentheses 3. Long story short, if you get the breakout above this descending channel resistance, it should come on, you know, good volume and everything. And wave 3 may even go up a bit higher here on that breakout. But the idea is that you get this 3, you get a 4, pulls back, retests the resistance as support. Wave 5 breaks out higher. And then that gives you this 1, 2, 3. And then this wave circle 4 will pull back toward the resistance again. And you'll have wave 5 up. And then it'll give you a 1 and 2 will pull back and 3 will go up. But that 4, 4, and 2 should remain above that descending resistance right there, okay? So this is kind of what we're looking at here. In terms of this range, what you have here basically is your buying climax, your automatic reaction. Because this appears to be reaccumulation, this automatic reaction becomes also a local selling climax. You have your automatic rally, your secondary test. Your up thrust gives you a higher high. Most of the time when you get the higher high, you're going to get a higher low. So instead of getting a spring on a drop down below, you're just going to have an LPS, a last point of support. As I told Discord, I said, if this is reaccumulation, we get this move up, then what we're going to expect, and I said right in this area right here, I said, is we're going to expect the jump across the creek. And all the jump across the creek is this move above your resistance, your supply. So you have your supply here, which keeps price down, right? But when you do your jump across the creek, that signals the end of accumulation. And what you do is you end up with a large candle spread, large volumes breaking out above that. And so it's, somewhere in this area right here. It doesn't have to, but most of the time you're going to have a pullback called the back up to the edge of the creek. And it all basically is a retest of that resistance as support. And then you'll head up. But anyway, this looks like it's going to be our jump across the creek here. All we need to do is see follow through to kind of continue to take us up above and the breakout there. By the way, the breakout of this descending channel resistance is that 15,800 or so target above the point of breakout. That's based on the height of that channel. In case you're not understanding which channel I'm talking about, man, am I talking fast enough for you guys? If you are from another country and I am just blowing your mind because you can't keep up with my English here, I do apologize. It's a good day, But this is that long-term descending channel resistance we've been waiting for that breakout of. That started back here at the beginning of November, basically 3 months ago. So now we're looking for that breakout there. I had given Discord some ideas when we were down here. We were still talking about the possibility maybe instead of wave 4 being right here, it could be right here. And if that was the case, we were looking at the 38.2 and then potentially the 61.8 to 70.5 retracement as possible breakdowns, in which case then we would have the target of this S1 pivot on the 4 and 1 hour. And then what we would say was this is 2 creating a flat. I was still not looking for downside. To me, it still seemed like the bottom might be in. And we haven't confirmed that the bottom's in yet. We've still got to break out above this descending channel resistance, but you know, we're adding a lot of confidence to that idea, right? But what I told them at that same time, though, you know, again, I was looking at, here's the reasons why I'm bullish on this. Here are the things I'm looking for, including the range, support on the pivot, stuff like that. But then I also talked about how the count here fit as it sits much more than it does as this potentially being a wave 4 up here. So, you know, we'll see what happens here. You know, if this is 1, 2, then this can't be 4, right? So you would have to somehow make this 1, 2 here. End of the day, you know, now that we've gotten through here, what we're really looking for is a breakout of the descending channel resistance. And then we're looking for a breakout above wave circle B here at 43,511 and 99 cents. And then really, this is the one we want, is the breakout above 453 and 22 cents. This wave X resistance. That's the one we really want to see. But those are our steps on the way up. But, you know, this is what I do with Discord, guys. I tell them, I say, listen, here's what I think's going to happen. Here's why I'm thinking this. Because, again, the idea is not just to tell you. The idea is to get you to start listening and understanding what we're looking at and why. It doesn't mean you're always going to be correct. Or I'm always going to be correct. But what it means is, you know, there is legitimate reasoning behind what I'm talking about. Not just simply, you know, everybody else on crypto Twitter is saying that or something. Or, oh, you know, I think it's going to do that because of my gut or something silly like that, right? The idea is to learn how to analyze the charts and understand what may be going on there. But again, just because we've done this doesn't mean that it necessarily has to go up yet. But it does mean that if the count is correct through here, that's a 1, 2. We're above that. That should signal that we're done here. Because, you know, wave 4, you know, this couldn't be wave 4 because wave 4 can't break up through there. Now, the other possibility is maybe this is a 1 and a 2. But like I said, if we break out above this wave B up here, then that'll say, no, that's not correct. So there's always, you know, possibilities. There's still possibilities that could come down. But I like what I'm seeing right here. I like this in terms of this range when we read it via Wyckoff, right? I like what it's saying here. I definitely want to see that breakout through this area here and head on up. And then I want to see this hold. I want to see this hold. We get the breakout. I would love to see a retest and see it hold. If we can get that, I think, you know, that's all she wrote. And even if we're doing a triangle or something, price is not going to come back down here. Remember, we've got our other couple of charts here. Let's see. Yeah, this is the triangle one. Remember, I gave you guys this one here, talking about this much larger range. And the idea, you know, that, again, you get your selling climax, automatic rally, secondary test, rally up, lower, higher low. This is the same thing here that we're kind of looking at right here, that little red range I was talking about. Getting through that. So, you know, again, what we're kind of looking at there. But like I said, even if it's a triangle, you know, you're getting 3 waves up, 3 waves back, and you're going up. If it was to continue lower, you know, again, we still had the idea that this was the other one. You know, the idea is to keep you prepared of what could be happening, right? And then this would be that flat correction. A, B, C, dipping just below and then up. But right now, as you can see, breaking out above on volume and candle spread above that daily pivot, we want to see that hold. Everything else aside, moving it sideways between the pivot and the S1, rallying up on volume and large candle spread through that pivot. As long as that holds, that should indicate that, hey, we're rallying up here probably to a new all-time high. The only other... oh, wait, no, I talked about GBTC too, didn't I? Yes, I did. GBTC. Remember, I talked about the idea. Here's the range. A little bit different than the spot range. let me get this on the daily here, because again, GBTC trades at a different on a different time frame, right? It trades Monday through Friday minus holidays, 8 to 5 kind of thing, right? So we actually got the dip down here. What I said looks like a spring, right? And I pointed out that it was heavy volume. I talked about the volume and price action in this area, and then I talked about the secondary test of the spring right here and how it was much lower, which is what we look for. And then now we're looking for a breakout above this swing high, and we're getting that this morning. So, even GBTC kind of jumping in there with it as well. One other thing I kind of brought up with Discord last night, there's this great, check this out. If you're into pitchforks, here's a great pitchfork, guys. So it comes off that 2018 December low at the beginning of this bull run. Takes you up to the June high here of 19, and then the March 2020 crash. And as you can see here, look at how well price adheres to these tines here in between. Look at how perfectly it lines with them, right? And so what I brought up was the idea that we're right here below it, kind of rallying up against it. And I said, if we get a breakout and close above this one right here, it should mean that we target this one up here. No guarantees, but it's been following pretty well that once you close inside that other range, you usually continue on to the other side of that range, the range being the tines here, right? So again, that would take us right up into our resistance area right here, right there. And again, if you're just using pivots, if you're breaking out clearly above that pivot, your next target's the R1. So that kind of area gets you right into this resistance here. And you can come back, and just make your, pull back, retest, and kind of continue up. I mean, it makes a lot of sense. It works well. So a lot of different ways of looking at this that are really kind of screaming, okay, well, that might very well be the bottom right there. My primary count still remains a wave 3, A, and then A, B, C as a flat correction. And then 1, 2. That's still my primary count at the moment. But again, I think, especially if we can get this break out of this descending channel resistance here, I think that then moves us up. It gives us a possibility that this triangle could be playing out. So we'll keep our eye on that as well. But in either case, right now is making a good case for potentially the bottom being done. We just need to see that follow through. I don't know how many times I can say that. I just want you guys to make sure you're really listening on that. And see that. All right. Let me see here. So yeah, I mean, that's kind of where we're at here. As we see, making this move up through here. I see a lot of talking in here. Let me see what you guys are doing. Anything I need to pay attention to? Let's see here. Let me see here. Oh my gosh, I'm so sorry. I cannot pronounce your name. It's Hlynur. If you want to spell it out phonetically, how it sounds, spell it like it sounds, and then that way I can try to do my best to remember that, and I don't butcher your name. I really hate doing that. Our names are kind of that one thing about us, right? That's always with us, and the last thing I ever want to do is butcher somebody's name. So, yeah. If I ever screw up your name, don't just take it, guys. I mean, be polite about it, but just give me a phonetic spelling. Spell it like it sounds and let me know. Because I'm really, again, I grew up around the world, so, I recognize, how the names are and how they can be different and everything. And I don't want to screw up your name. I know I said that a lot there, right? It's true. Hey, some risk. What's up, man? Good to see you here. Ali is here. He says it will be interesting to see if price develops to 3 waves or 5 waves going forward. Let me see. Let me kind of catch here. Yeah, Hank, Hank does something I've talked often about, guys, and that's just taking the longer time frame. If you want less headache in the market, you trade the longer time frames. The newer you are as a trader, the more you should zoom out to the larger time frames. It's more forgiving. There's not as much noise, which is all that where price goes up and down over itself. Like this right here, which makes it difficult. There's a lot more less of that, at those larger time frames. So Hank's kind of, he takes those larger time frames. I think like a 12-hour daily chart, I think is what Hank looks at. Correct me if I'm wrong, man. Now draw the other one. I don't know what you mean, draw the other Pitchfork. It's just normal Pitchfork. You have to let me know what you mean there, Hank. ARM, what's up, man? Good to see you there. Let's see. Let me kind of catch up. 83 Madden, what's up, man? He says, what is more significant in the example of your downward channel? Because in the log chart or in the normal chart? Because the normal chart, the channel has been broken. Oh, definitely the log chart. Definitely the log chart. Why? Because this from the top up here to the bottom down here, that's a 52% decline in value. That's a huge move. The larger your moves, and which means usually the larger your time frame, the more likely you want to be with log. Now, here's the thing. The good thing, I've always said this, the good thing about log is, as your time frames get lower, it becomes almost the same as arithmetic, which is, your other one. But on the larger time frames, your arithmetic looks like crud. You can't properly figure out where things are going, because you remember, when people enter the trade, guys, when you guys trade, you're looking for 10% or 50% or something, right? You're not looking for $100. If price is at $1,000 and you're looking to make 10%, you're looking to make $100, right? But if you get in at $10,000, you're not likely to look to get $100. You're still looking to get 10%, which becomes $1,000. So your semi-log scale makes that more into what what we usually trade for. What would the prices we're kind of looking at, not the perfect, again, the arithmetic, the difference between it. Again, it's the whole idea that as that discrepancy between those prices becomes larger, you're looking for the same return, but it's going to the same percentage return, but it's going to be a larger dollar return. So yeah, I hope that makes sense. Let me see here. So yeah, I don't really ever look at arithmetic, and if I do, it's going to be on a short time frame. I won't normally look unless I just screw up and forget to switch it to log. I won't make it a point to look at the arithmetic chart on a large time frame. It makes no sense. And I get arguments from people about that. Whatever, save your arguments for yourselves. I'm not going to change. I've been doing this quarter of a century now, and I found that using log on the larger time frames works significantly better. Significantly. So, if you want to use arithmetic, I'm not talking about you straight up there, 83 Madden, but just people in general. People seem to get butthurt about it, and I'm like, okay, do what you need to do. But honestly, at the end of the day, that logarithmic works, semi-log works well, works a lot better on these larger time frames because it's more normalized to how we look in the movements we expect. I hope that makes sense. Gosh, sometimes I feel like I'm repeating myself, but not really giving anything extra in it. Let me see here. Jeff Bear, what's up? He says, I'm having a hard time getting into any position on Bitcoin based on intermarket analysis. The indices have significantly more delta build volume than delta risk volume. Some of the last 2 weeks. Yeah, you're probably having a lot of trouble just because it's sideways. I mean, the reality of it is, man, this is sideways, right? So you had your swing low and your swing high here, which ended up becoming your swing high here. And then at this point, it really was just between this swing low and, basically this kind of swing high area here. That's my red range we've got on there. So really what you're looking for is impulsiveness on the breakout or the breakdown. But it's difficult. Especially, if you don't have a system in place that you've been using effectively for, any length of time. It's difficult when you have the overlapping price action to find an entry in it. It is. But that's why I usually look at with our members with Discord there, all the, multiple different time frames, and I give them all the information that they could potentially need to really kind of enter a trade based on however they want to do it. I'm not here to tell you, where you have to enter or where you have to exit, because, what makes you the investor or trader you are is different than what makes me who I am. So what may be a good position for me to enter or whatnot or exit on may not be the best position for you, right? And so that's always where it's at. So yeah, I can understand that for sure, Jeff. But I see a lot of reasons, as I've pointed out and continue to point out, lower to higher time frames, of why there's a possible bottom in here. One of the best things you can look at right now is that we remain above the daily pivot. If we move up, come back and retest, and then break out above whatever that swing high was, that's a good clue that price is going to rally up through the pivots. So that would be some way that I could help you there. Again, looking for also an impulsive breakout above this descending channel resistance here. So, those would be probably the two big, more macro things to look at on that. Let me see here. Yeah, see, coming out of here, it looks like we may have like a 1-2. See, there's a couple of different ways to maybe count this. So this could be like a 1, 2, 3, 4, 5, which gives us 1, 2, and then this would only be 1, 2 hitting 3, of 3 of this 3 here. So like I said, we've got, as long as price continues to follow in this general pattern here or further, we've got a minimum target up here, 42,293. If it continues through there, secondary target's up here at 43,741, and then up here around 44,840. Now, why do I say that? Because when you look at this, again, with this being such a long period of time, 3 months here with this descending resistance, a breakout should really be a breakout. We should see large volume, large candle spread as it breaks out, which would lead this wave 3 here that we're doing subdividing more than it normally would and give it an overextension. This point right here, this 42,293 is our regular 1.618 normal third wave target that we look for. But again, if it continues up beyond there, then we look at normally where the wave 5 would be, which is right there around 43,741. And then you can start looking at derivatives of, 2.618, 3.618, which are common relationships for wave 3. So the breakout of this thing is what keeps it open the possibility that we may just continue to overextend on wave 3 up toward one of these other targets here. So, yeah, we're going to kind of watch that. Let me see here. You don't think I'm allowed to say butthurt, you take offense? Well, hey, some risk, man. You know how I feel about you taking offense. Anybody taking offense. The world is always offended. And I know you were just kidding around with this, but point here, guys, listen. Societies around the world have got you so into this idea, especially westernized societies, that, it matters if somebody's feelings are hurt to the extent that you should change what you say or what you do. You know what? Who cares? Stop worrying about that. It's a bunch of nonsense. It's a bunch of BS. If you say something and you're not intending to hurt somebody's feelings, just saying something in general, but people just, oh, I'm hurt, well, whatever, go get hurt, get over it. I come from that generation that, you would never have gotten away saying, oh, that hurt my feelings. Everybody would have been like, well, suck it up, buttercup, get it done. Let's go. Come on. You got, there's something to get done, whatever it is, work or whatever. You can't sit here and cry that your feelings were hurt. The world's not here to make your feelings feel better, right? The world's going to move on with or without you doing the things that you need to do. So with that in mind, stop worrying about being hurt by what somebody says, and just go about your business and do your thing and make sure that you're doing the best that you can every day and taking care of yourself and your family. I mean, that's really where it's at, guys. I'm sorry. I'm not very, I try to be understanding and respectful as much as possible. I rarely say anything out of disrespect. I work really hard on that. So if I do say something that offends you, just understand that's your issue. I can't make you feel a certain way. That is you and whatever's going on in your life and how you are acting and, the way you view things that kind of determines, whether you're offended by somebody, right? I think Asum Risk agrees with me there. I think even Hank agrees with me there. Most of us that are in my age bracket up here or older kind of feel that same way. It's the really young generation that feels that way. They feel like the world's doing without them, and they need to say something to make themselves be seen. They need to be seen. That's the whole thing. Don't get caught up in that, guys. Look at what you did, Ace and Risk, man. Make me step up on a rant there. Oh my gosh, let's see here. Hank's got another pitchfork here. What other pitchfork is it, Hank? Is it the downward pitchfork? Okay, Hank's, I'm sorry, guys. I'm talking to him. This one right here is what Hank sent me here. I guess this is the pitchfork you're looking at. Yeah, found support right there on that on this area right here, the middle, the median tine here. Yeah, getting a nice move back up off there. I like that. What time frame is that? The weekly. Okay, yeah. That looks pretty good too. Getting the bounce off the middle here and rallying back up. That looks good. Yeah. Yeah, 83 bad. Yeah, you're going to see that. You're going to see that the trend lines are going to be different over a long time frame if you have arithmetic or semi-log because of the reasons I already gave. Again, the semi-log tries to normalize the price movement there in the way that we generally look at it, as people, right? And so, yeah, you're going to get that. You're going to get that. But longer time frames, I would not look at a linear. I would never look at a linear on the long time frame purposely. If you have large movements, you need to be looking at semi-log. Just call you HJ. My name is not good for international traveling. Well, all right, my friend. I will do my best to remember just to call you HJ then. I appreciate that, though. Thank you. Let me see here. Hank says, this one is interesting too. Always helps to look at the chart in various ways. Let's see here. Hank's looking at the line chart here. I'm not a big line chart person, guys. Again, and I'm not because I don't believe that the line chart gives you a lot of... I don't believe it gives you any type of edge. Reason being that... something I've talked about here before is that so much information are in the wicks of the candles, as far as real information about the traders and their intentions, that when you look at line, you miss out on all that. So yeah, just me personally, I don't find a lot of value in the line chart, but a lot of people do trade them, and that's on them, to trade it the way they want to. I'm not going to tell you not to trade it that way, anybody, but my personal preference is I don't really find anything redeeming about them. So yeah. But that one seemed to, still follow on with what the other one was still showing there. Though, of course, it was on the bottom line of that ascending pitchfork. And, again, you missed that whole wick of information on that, right? So, yeah. Let me see here. Let me see. Let's find out what you guys are talking about here. Some risk says between pitchforks, Elliott wave breakers, TA, and triangles makes my head hurt. Well, and the great thing is, guys, the larger your time frame, the more simple you can make trading. If there's one thing I've learned over the years, it's that the shorter your time frame, especially when you're getting down, if you're trying to trade that 15-minute, 5-minute, 2-minute kind of thing, you really need to have multiple indicators on there because you're looking for a confluence of events to happen to kind of really give you a reason to trade on that shorter time frame. But as you get out to those larger time frames, less and less, you can be much, I think Hank said it earlier, simpler trading, doing that. You don't have to have anywhere near as much with that. Let's see here. Let me kind of catch up with you guys here. Guys are excited. Somebody from Scandinavia here, huh? How about the USD, Chris? Euro USD or DXY in today's NFP? Yeah. So, again, this is what we're looking at here. Bitcoin's looking good. So we were prepared for this in Discord. And hopefully if you aren't there with us, hopefully you were prepared for it as well. You didn't buy all the the consistent, oh, we're going down forever kind of thing and all that other nonsense, or, whatever it is. There's always possibilities. But, again, the same thing I said over here, one of our other members had reminded me that I had said the same thing over here with the idea that this had come down here. And I said, no. I said, look at the volume and price action. This looks like a flat, looks like accumulation. We're going to head up. I said, we could go down, but until we break that lower low there, my views are up, right? And I said that same thing locally right here, and they pointed out that I said it. I didn't realize I had said it, but yeah, I was saying that same thing in this area here, in this area here, same basic ideas as far as, the range looking like some sort of accumulation potentially, volume and price action analysis looking good, and until we actually break down, I'm still leaning upside. So we're kind of looking at that. Let me see here. DXY, what's going on? Man, look at that. So DXY dropped down here just prior to 85.4, rallying up this morning off that NFP surprise to the upside. It looks like it's 1, 2, 3, 4, maybe. Let me see here. Make sure it's not just like a 1, 2, 1, 2, maybe. Oh, yeah. Actually, it looks like that maybe, if we zoom in here a little bit, gonna take us in a 30-minute. Yeah, it looks like it's a 1, 2, 3, 4, 5. So now we've got a 1 and a 2 on the pullback. A little bit lower probably. We're right here, right around the 50%. We could hit this 61.8 to 70.5 here. Looking for that breakout above, this one right here, the 15-minute pivot. Right there. Is that still the current 15-minute pivot? Yeah. So basically just looking for a breakout above this area, kind of signal that wave 1 and 2 is done, and we're heading up then. Because, yeah, I do believe that this is 5 up and then A, B. We got to see here. We may be done or just about. Looking for a breakout above that 15-minute pivot to say, hey, we're probably headed up there. So let me kind of zoom out here a bit. So interestingly, now here's where there's a little bit of difference with the counts here with the DXY and the Euro USD. So as you can see, we have not broken down below the swing low here, right? With the dollar. Dollar stayed above it, right? However, Euro USD, you kind of zoom out here a bit. It peaked out just above the swing high here. So it was 1.14828, and then we got 1.14837. So like not even 0.9 tenths of a pip higher here. But that invalidated the idea that, that the count was 4 over here. So I've updated this count coming off the top here. As basically a 1, 2, 3, 4, and looking for a 5. If this is correct, then 5 is a target of 1.09039 down here, okay? Now, if I'm looking at this, just from a wide picture, this daily here, I've got this as a, as a 1, 2, 3, 4, 5. I think it's possible this could be a, this could still be wave 4 here playing, but it's a flat correction. So A, B, C. About where we're at, maybe higher. So this is kind of interesting. If this is, we've retraced here 38.2. That makes a lot of sense. So I'm thinking maybe we might have an ABC here. Maybe we might have an ABC here. I'm going to have to go look at it later and then see if we've got 5 here or maybe a little bit higher to get 5 in that. But that'll give us, 4 of 3. And, of course, if we go back over here to the dollar, again, Looking that we maybe have the same idea maybe. It's possible that this could be way forward. Maybe again ABC, maybe an ABC, and then 5 down. I'm really have to look at this right here to see that. The only difference being that the Euro USD pulled further back. But that's because the Euro USD is just the Euro against the USD. The DXY is that combination of things, right? So 58% of the weighted value, almost 57 some change, is the Euro USD. 11 and some change, 11 point somewhat percent is the USD Japanese yen. You got 4.5% of the weighted value or so, I think is that might be the US the cable USD or the USD yen. Not USD yen, I'm sorry, USD CAD. So, so what I'm trying to say is the dollar may not pull back quite as far as the euro, because it's a weighted average of multiple different currency pairs, whereas the euro itself is a pair. It's its own. So it gets a stronger movement off the news. What Lagarde said, and what's going on with the ECB over there. But nonetheless, this could still be a flat correction here as well. So in either case, looking for a continued rally with the DXY and continued drop here with the Euro USD with that. I hope that makes sense, guys. So that's what I'm kind of thinking. Again, today's NFP, man. So what happened with today's NFP? So, there was last month we talked about ADP, and ADP was looking for this huge, like 800,000 ads, job ads, and we got like not even half of that. And then this time they were looking for like a negative. They were looking for a job loss. And here we are. Not even just did we get a positive. Not even did we hit the 157. Oh, guys, what is it? The 150,000 that was forecasted, ads. We actually added 467,000. And not only that, but we added another 500,000 jobs revised to last month. 500,000 jobs revised to last month. So that gives us a revision over the last 2 months, additionally, of another 750,000 jobs. So with that, you got your participation rate up to got it up to 62.2%. Previously it was 61.9. Now remember, the participation rate is just those who are actually participating. It's not everybody who's not, choosing not to work or whatever. So you got to make sure that you understand that. What else did we have here? Our average hourly earnings year over year. This was huge. We had a revised 5% for last month. We were forecast for 5.2 this month. We actually got 5.7. That's huge. That's a huge leap up over what we were expecting. Unemployment rate, just a scant higher than what it was. Previously 3.9, forecasted to be 3.9. We actually hit 4%, but not really anything big of an issue there. Now Canada is interesting because they released their jobs number this morning as well. And so they had a revision. They revised up 78.6 thousand for last month. But they forecasted a drop of 117,500 lost jobs this past month. But they actually lost 200,000, 200.1. So, if you're looking at that USD CAD pair, oil's looking like it may be topping out. And so that combined with the job losses over there in Canada, should really kind of hit the loonie negatively. And then, of course, with the dollar doing its thing, the dollar side of that should be. So it might end up being a good long trade coming up here, guys. Just kind of watch that. But yeah, I mean, just a really great, it was a great jobs report. But I think it underlines this idea of, what people are calling inflation, the rise in prices and whatnot, which means the Fed is probably going to become even more aggressive. The whole idea, they're worried about this wage spiral where, wages continue to go up, people continue to make more money, so they continue to spend more money, which continues to inflate prices higher, right? To raise prices higher because you still have a lot of money going after fewer goods, right? And I think that's going to be what the Fed's really kind of worried about. And so that might, has a good chance of causing them to be even more aggressive with their normalizing of the books and rate hikes and whatnot. I mean, if this is the way they're thinking, I mean, it gives them all the ammunition in the world to do that, right? Let me see here. Kind of catch up with you guys there. Let me see here. It says, I realize you're not there yet, but when you get there, it looks like a weekly pivot rejection on natural gas. No, you said NQ1, right? I don't even have that chart. Let me see here. Let me make a copy here. Look at some futures here. Let's see what you're talking about here. Let's pull up the week. You said the weekly, right? We got a rejection here at the daily, which is about the same area as the weekly here. That is an ugly set of candles right there. I would not want to be going long with a weekly close like this. But effectively, guys, your range is the swing low here at 13,706 to the swing high up here at 14,353.25. That is effectively your range. You're looking for an impulsive breakout up or an impulsive breakdown. Anything else that happens in there, may see some overlapping price action, right? But if we zoom in here a bit, see, even though you're well down here in the weekly with the Stochk RSI, bottom now crossing bullishly here, your RSI still has room to go. So that could just give you a local bounce here. It's possible maybe a 1, 2, 3, 4, 5. And then A, B, C coming up here, and then kind of dribbling down for the next one maybe. Let's see. Yeah, so there's 5 as a leading diagonal and 1. This one maybe 1, 2, 3, 4, 5. 1, 2, and then 1, 2, 3, 4, 5. 3, 4 is a flat maybe. But you're breaking up into this here. But usually we don't look for wave 4 to break up into wave 1, except in an ending or leading diagonal. The other caveat that most people don't understand is that in futures markets, you may see a wick into a wick, just a little bit, maybe something like this, and that's a product of the of just the amount of volume that goes through in the futures markets. So if you didn't know that about LA, now you know. It's something that doesn't always happen. It's nothing happens, commonly. But this could, be 1, 2, 3, flat correction here for a 4, and just kind of pushing up into that, because it is the futures market and highly, with the leverage and everything there. It's the leverage. There's so much volume with the leverage. That's the reason. And so this could be 5 coming on down here still. Yeah. And so that would be a 1, 2, 3 coming down. Right now as it stands, let's see here. Actually, you know what? I think this is probably a flat right here. 1, 2, 3, 4, 5, A, B, C, and then coming down. That gives us a 1618 over here. It gives us almost a 2618 here. As I said, a common relationship with wave 3 is the 2618, 3618, 4618. So we could see that fifth wave down here giving us a 1, 2, 3, 4 up here, 5 down, and then you have a 1, 2 continuing down. So you're just kind of building this this ceiling here, right in this other area right here. So you got all this. It's coming over here. See how high volume node? So yeah, you get up there, build that ceiling, and then drop big after that. So yeah. Let me see here. Let me see here. So yeah, so that's what I'm kind of thinking about with those Nasdaq futures there. This right here, the Nasdaq 100 E-minis. By the way, guys, hey, just a heads up: if you're in the U.S. and you day trade stocks, make sure that you understand what the pattern day trader rule is. Okay, I'm not going to go over here at the moment, but basically, you have to have an account of a certain size to trade as much as you want day in and day out. Otherwise, there are time limits for how long you have to go between trades when you're below that level. The way you overcome this is you trade futures. You trade futures or options. But you can trade futures like the NASDAQ futures here, the E-mini futures for S&P, stuff like that. So, ES1, NQ1, stuff like that. And you can trade as much as you want. The day pattern rule does not, day trader pattern or whatever, doesn't apply to futures. So just a little heads up there in case that you didn't know that. Now you do. And so, yeah. That's why a lot of people, and I'll be honest with you guys, we talk about stocks and that's okay. I like stocks more for the longer term trade, but if I'm trading, more like for an investment kind of thing. If I'm trading, man, I'll trade futures, oil futures, natural gas futures, stock index futures, stuff like that. Just because they're really not difficult to trade overall. I mean, honestly, just in the grand scheme of things. And, again, I got into them back in the day because, the rules and the way things were when you start with the smaller accounts. So, yeah, just something to think about. Pattern day trader rules. That's what it's called. Let me see here. Jeff says, yeah, these choppy moves will hurt day traders. What I meant was that I refuse to open a long Swede trade position on Bitcoin because there is net selling on indices, on the move up on indices. Yeah. And I mean, that's fine. Like I said, no matter how you're looking at it, the information is because there is that sideways. That was my big point I was trying to get across. No matter how you're looking at the charts, whether you're looking at the charts themselves or like you there looking at, you say you're looking at the net selling there on the indices and whatever. It's all because the price is moving sideways in that range there. Yeah. So, it just makes it difficult to trade. It sure does. Definitely understand that. Let me see here. Let me kind of catch up with you. Hank says he doesn't mind taxes as long as the taxman is vaxxed and born in the mid-'80s. Oh, you guys are a mess. Let me see here. Let me kind of catch up with you guys while I take a drink here real quick. No disinformation in the wicks. No. The wicks are where the real information is. The wicks are where the information is. Disinformation comes in the spread. The wicks tell the truth. They tell what's going on overall. Yeah, I would never say there's disinformation in the wicks. No. Let me see here. But different charts with different wicks doesn't mean that there's disinformation in them. You have to look at the chart, the wicks within that chart. Now, it doesn't matter what anybody else is doing. You trade your chart. I think too many people here with crypto, they're comparing charts all the time. Oh, Bitfinex this and Coinbase that and Binance this and Kraken that. And at the end of the day, that's not how you do it. Your shorter term movements, all these, these movements are going to be different. Sometimes they seem visually different. But what you're looking at is overall, they're going to be doing the same thing. I think you really kind of just put too much work into it if you're worrying about what other exchanges are doing, whatever. You trade your chart, you worry about that. The other chart, what's going on there, is not going to tell you what's going on in your chart. As far as directly, contradicts your chart or something. Yeah, I hope that makes sense. But I do. I see, I've noticed this for years. The traders in crypto spend a lot of time worrying about the differences, the slight differences between the different charts. No, you worry about the chart you're on and you deal with that chart. You work with that. If you're worried about everything else, you're going to confuse yourself. Because, you're looking that they overall do the same thing. You're not looking that they're exactly the same on every move. So yeah, let me see here. Hank's still hoping the DXY goes to the 80s. Let me see here. What'd you say? Let me find my DXY chart. There we go. You said zoom out to the weekly. Let me see here. Let me kind of take all the rest of this stuff here. Well, yeah, it's bearish engulfing at the moment. May not end up being. As always, bearish engulfing is just a pause, potential reversal. So don't ever forget that. Let me see here. I know I've had examples before that I've shown where it doesn't actually play out that way. But I mean, you even have it right here where it just drops a little bit further and then it goes back. Well, I guess right here it went down further and went back up. I don't know. I'd have to look through it again. I know I gave you guys some. But anyway, yeah. So it also depends on where it ends today. If it rallies back up in there, it just has to rally above 97.217. Rallying up above that will keep it from being bearish engulfing. But there is something to be said for it. I did talk last week or last time we were here, I believe, about the idea that we moved in sideways between the R1 and the pivot. So we could see price come down to the pivot, and then we'd want to see a reversal off that and a breakout above the swing high. And then if we saw that, that would indicate that price is likely going to run the pivots this year. Getting up through there. But again, as it stands right now, if you look at fundamentals as far as the dollar and the euro go, I mean, let's be real. The euro had a little bit glimmer of maybe a little something, but still, even with what Lagarde is saying, it's still well behind of what the Fed's already doing. And then we get today. The Fed's going to be falling over itself to be more aggressive after today's jobs report. Again, for the reason I explained about the wage spiral rising and all that kind of stuff, leading to higher prices and everything else, which I think really the Fed is kind of concerned about at this moment. So yeah, Biden doing a great job. Good times. No, the presidents aren't responsible for any of the nonsense. As far as the markets go, they may be responsible for knee-jerk reactions, as I mentioned earlier, but the president doesn't have much control over what goes on in the markets. Neither does the Fed. The market's going to do what it's going to do. But if you need a narrative, look at what the Fed's expecting there. And then all they do is just kind of, continue to feed what's already happening, I guess what you could say. Things are already happening. Remember, the charts are a visualization of social mood, right? Of what everybody feels. So charts happen, and the president, Fed, whatever, they're all reactionary. They don't make the charts do something in the grand scheme of things. Like I said, the things they do sometimes knee-jerk reactions, but it's what goes on with the social mood that determines what the charts look like, and everybody else just kind of reads them and tries to follow through afterward. Yeah. Do I prefer Biden or Hillary? I don't prefer any of them imbeciles. That's what I'm going to say. And I don't just mean them. I mean Republicans too. And I mean Libertarian Party people that want to go that want to be president as well. I mean, again, it's all about power. Power draws to it those who intend to use it. And if they intend to use it, whether they really believe what they're doing is in the best interest or not, they're going to do it. And when they do it, they're going to hurt groups of people. And it's not okay. I don't think it's okay, to hurt groups of people just because you think that, they deserve to be hurt. It's such nonsense. And by the way, that's for the people that talk about the rich, they got to pay their fair share, blah, blah, blah. So much stinking nonsense. But, their mantra basically is the rich deserve to be hurt because we're not doing anything that we're doing, whatever income level you're at. It's just such nonsense. It really is. But that's what government is. That's what government is. So, yeah, I'm not a fan of any of them. Any of them yahoos. Let me see here. What's up, just in time? Coming in on the y'all need Bernie comment. Oh, man. Let me see here. I'm going to get off that right there, because we do have, people have their opinions about politics and whatever. So it is. Do we recommend a broker for futures trading? I mean, I don't usually recommend platforms a whole lot, because it depends on where you are. Let me see. And you're outside of the U.S., right? But you're with us, aren't you? You're with TWC? I think you are. And so if you are, yeah, I believe you are, right? Just post in the general discussion channel. Ask the question, tell them where you're based, and just say, what brokers do you guys use? And there's people over in that area who will be a better job than what I will do as far as, kind of giving you any recommendation. Heck, they might be listening in right now. They'll tell you. Hey, some risk. Have a great day, man. Let me see here. Oh, see there, Ali's coming right up. Says, for people in Europe, the only one really is FXCM if you're looking to trade U.S. index futures, metals, and such. I appreciate that, man. All right. Armands, what's up, man? Good to see you here. I appreciate you, man. You're reading that recommended book? That's good stuff, man. Some of those books, good, really good stuff. Let me see here. Do I think the Ukraine mess is going to affect the euro? I don't think it's going to affect the euro in that it gives the euro direction. Again, as I mentioned already, I believe that, social mood is what gives the chart direction. And then everything else just kind of goes in. And most of the time what we'll do is a news event will happen, and then the chart will do something. And then we'll say, oh, look, it's because of that happened. But, again, I keep telling you guys, a great book is that Prechter book, Socioeconomic Theory of Finance. One of those first chapters there does a great job showing you time and again where, that's what we think. But then if we're mistaken with that, because if we go and look back, price action and news events happen all the time. We just only pick up on it at certain times when it serves our narrative. But that book there shows you a lot of times where it happens and it contradicts consistently and whatnot, or you think one thing's going to happen, something else happens. So it shows that it's really not a good indicator of what's going on. Again, the idea that social mood directs what's going on with the charts, the other stuff just kind of comes afterward. Now, if we look at it that way, how people feel based on that, there could be something. But again, I think that's all in the bigger mood. That's just one thing that's happening that affects the social mood. There's been some great work on the study of cycles and wars, high-end and low-end wars, stuff like that, and where they come in cycles. And so it's not that war itself drives the chart anywhere. It's that the chart is just doing a thing, and within that thing, wars appear at certain points. But it's just because the chart is a reflection of that social mood. So, it's how people are feeling overall. And it aligns with things. I mean, Elliott Wave International has really done a great thing with this, guys. I don't get anything for telling you this, so take it for what it's worth. But they have their Socioeconomic Institute, and they have a thing that a membership that you can purchase, and I would suggest you do it. But they do post free stuff throughout the month, and they've done a lot of great research on things like what types of movies come out when social mood is at certain areas. How do presidential elections occur, or turn out based on social mood? War, social mood, all these things. But it's not just them, though. There's other ways of looking at these cycles, K-waves, stuff like that, where you get the same type of idea, though. You get the same understanding. So, yeah, I don't think necessarily that if Russia is to jump on into Ukraine, that it itself will necessarily affect the euro. I think the euro is doing what the euro is doing already. And because of social mood, it's doing what it's doing already. And because of social mood, things may occur. Yeah, so I think the chart's already moving the way it's going to move. And that's a hard thing for a lot of new people, or even, especially for traders that have been around a long time that don't view the charts that way. It's really hard for them to wrap their head around. But practice. It's really interesting perspective. Gives you a lot more value, I think, than all the news event stuff and whatever. Yeah, HJ, I thought you were. That's right, because you were in the Elliott wave thing last night, right? And of course, the Euro USD, we were looking at that, doing what we were expecting it to do, right? So that turned out pretty well. Oh my God. People come in. Really? If you guys, listen, guys, I'm going to tell you what, really, you get people that come on here in the comments and they start saying, oh, you know, this person or that dev or this team, whatever, or join this Telegram, whatever. I tell you what, guys, honestly, if you're following along with that nonsense, you're going to lose your money. If it was anything worth promoting, they wouldn't do it in that way. You see what I'm saying? That is just a way to get people in there because they don't have the ability to promote another way. And if they don't have the ability to promote another way, then you should really have questioned, the efficacy of their of investing in whatever they want you to invest in. Just be careful with your money, guys. Again, I've been doing this for a very long time. I've seen a lot of scams. And I'm not saying that they necessarily have to be scams, but I'm saying if it walks like a duck and sounds like a duck, right? So just be careful with that. Yeah, Armand, you said you're reading the the STOF there, the first chapters. He says it is just 1-to-1 what's happening right now. The most epic book I've read. It is crazy, isn't it? It's good stuff. It really is. I mean, it's a big book. What is it, like 800 pages or something? But man, you read through it and it's like nothing. It's a great book, really. Let me see here. Oh man, I appreciate that. He says, HJ saying, recommend tier 3 for those who are thinking about it. I've been going through older, the TTT streams are our Wednesday streams. Again, for tier 3, we do 3 streams a week. Mondays, we spend an hour talking about Wyckoff and current charts. Thursdays, we spend an hour talking about Elliott wave and current charts. And then Wednesdays are our tips, tricks, and techniques, where we give you rules-based strategies, or we discuss indicators much more in depth so you get an understanding of what that indicator is and how you're supposed to use it and what it means, or how to use it with another one together, things like that. You know, just really kind of digging deeper into things. So that's what he's saying when he says, I've been going through older TTT streams, and man, they're gold for newbies like me. Yeah. So we keep them all up there. Whenever you join, guys, you have access. We've been doing tips, tricks, and techniques for just over a year and a half now. I think since June of 2020. Gosh, man, we've been doing it for a while. So anyway, yeah. A lot of good stuff in there. Let me see here. Yeah, and I think, Armand's talking about that book. You can get it a lot more discounted today than what you could previously. Yeah. So definitely something to look at there. Anyway, so this is kind of where we're looking at with Bitcoin and the dollar and the Euro USD. ARK, man, if you guys shorted ARK or, got into some options on this, I mean, we were talking about it back up here, looking for a minimum here and a breakdown further. And I mean, here it is. And we rally back up and get rejected coming back down. I think ARK's, we could get a bit of a rally here, but I think overall we're headed down further. Tesla, again, trying to find some support on what is right now the 4-hour pivot, but overbought here. We got a lot of volume coming in, so we'll have to see if we continue to keep this this count as it is, or if we have to adjust it a bit. I went long personally on Tezos just a couple of days ago. I think we're almost up about 20% right now, I think. Almost. Maybe about 18% or so right now. So that was a good entry right there. PayPal, man, just losing it. But they should probably see a rally here. But it does look like 5 waves down here. So I would expect, this is a 1 or an A. We should get a move back up, potentially toward this area right here. Let me see. Yeah, look at that, 50%. That's where I'd be looking at, right around that 193 area. So 1 or A, and then that would be 2 or B, and then we'd look for it to continue dropping down after that. But PayPal getting annihilated this week. Facebook, Meta, whatever you want to call it these days, taking it to the chin, right? How did that come out? Let me see here. It was pretty bad. I think Zuckerberg lost like $31 billion of wealth or something with that. Look at that. Yeah, look at that. It's a weekly. Look at that drop. Whoops. But again, on the weekly, like with, with PayPal, you've got this well oversold kind of area, capitulatory kind of drop there. If I look at this, looks like you got a 1, 2. Gotta zoom in here a bit. Not quite. I was looking to see if maybe we had like an expanding wave B kind of thing here. And we're going like an A, B, C, D, E, but that E is lower than what would be over here. 353.65, 353.83, and 352.71. Yeah, not it right there. But man, that looks like a possible wave 3 right there. So rally back up. Maybe toward kind of this area here, right around 287 maybe. And we'll see if we can continue up through that or if we get rejected by that time and come on down. But yeah, that's a big thing. But when you have those big drops like that, then you expected at least some sort of relief rally. It should at least hit this EQ here, or this high volume node here. 265 to 275 at least. And then potentially up here a little bit higher at around 290 or so. But unless it breaks out above that swing high there, probably look for further down. Let me see here. You say these people are long gone before I even notice them, but I notice them and I have to remove them because they're not removed on my end. What I'm seeing on the chart, on the chats there, I'm not seeing anybody's removed, so I have to go in and remove them. So I don't know how that's working. No one sees those posts anymore but you. Okay, well, that's good to know then. That's good to know. I appreciate you guys that got wrenches doing your thing. I appreciate that. Like I said, I just haven't looked there. I'm like, man, what is these people seriously coming on with that stuff? Let me see here. So, yeah. So, I mean, that's kind of what we're looking at there. Again, tech stocks leading the way off the top. We talked about this over the last year and a half. We said when it happens, it'll be tech stocks leading the way. Almost any way you look at it, that's kind of where you're at. I think, let me think here. I didn't look at it, but I think, what is it? Pinterest, right? I think they were doing all right. I think they were one of the ones that were doing all right. There we go. Yeah, they got that rally up off that low there recently. But overall, still not so great. Still with it down there. But recently, just doing a bit of a rally on this. But as you can see, all you got to do is look left, guys. Look at this. It comes down here. You find support right here. Comes down. You found support right here. Comes down here. Find support right here. I mean, all you got to do is larger time frames, guys, and look left. Those will give you a heads up on easy targets that are likely to, find their way in there. But Pinterest did have that move up. Right here. What is that rally there? It's about gapped up this morning, went up about 10%. So yeah, not a bad move today on that move up. And of course that was on earnings there. Surprise to the upside, both in revenue and earnings there. So that worked out real well. Let's see here. anyway, yeah, so there we are kind of with that. I guess let me jump in here real quick, and then I've got to get out of here, guys. Again, I tried to keep this at an hour, but I just find so much to talk about with you guys, and I appreciate those of you who come in and check in for as long as you can, or for those of you that actually are able to hang around and you choose to. I really appreciate that. Let me see here. Here is silver. So silver having this big move down, move up, kind of doing its sideways thing here between the ECB and the jobs report over here and what's going on. Basically looking at wave 2 being finished up here. And if we can get a breakdown below 21.945, that's this wave circle X support there. That gives us a wave 3, minimum expected wave 3 target down here of 18.845. Let's see here, gold. Gold, same kind of idea. Wave 2 done up here, looking for a move down, breakdown through wave parentheses X here at 1788.50 is going to add confidence to the count. Gives us a wave circle 3 target, minimum target down here at around 1693 and 10 cents with gold there. I did say oil. I was talking about some oil. Oil finally closing above 90, breaking out there above 90, Brent and WTI. So here we are, potentially done, maybe a little bit higher to go here. We're coming up toward what we're looking at here. A breakdown below this wave parentheses 4 support here at 91.28 is going to be the first clue that maybe wave 5 may be done here. We're looking for a breakdown below wave circle 4 over here as triangle support at 86.55 to really kind of get that downside. Feeling pretty positive on that. But, again, 100, man. I don't know that this extends to 100, but 100 is a really emotional, psychological number. I could see this attempting to continue to subdivide here and getting maybe even some kind of blow off around 100 or trying to get there before it comes back. So we'll have to see how it plays out at the moment. But definitely kind of moving its way up. Guys, you have to understand, we're up here. We've hit, about 92, almost $93. That's off a negative 41 back in May of 2020. Negative 41 or so, around that one, negative 43 was the low. It closed at like a negative 21 or something. First time we ever had it close in negative territory since the NYMEX was started, back there in the early 80s. So this has been a hell of a rally off there. Good times, right? Good stuff. Bianca, have a great weekend. Let me see here. Let's see here. So that's oil. That's all that. I mean, I think it's pretty good to look at right there. That kind of gives you an idea of what's going on, guys. We looked at. Well, I guess I can pop up the Dow here real quick. I know we looked at the Nasdaq 100 E-minis. There are micro right there. Dow Jones is looking like this right here. So I'm thinking we've got potentially a 2 done up here between 65 and 70 and a half. We want to see this break on back down here because we've got a 1, 2, and then 1, 2, 1, 2, 3, 4, 5, 3, 4. Might give us a 5 for a 1, 2, 3, 4, 5 still coming down. Importantly, we drop below the triangle support here, wave circle 4, which is that first hint that maybe wave 2 is done. But we need to see a breakdown below 33,807.51 to add confidence to our account here. So that's kind of what we're seeing there with that. This is the 30-minute chart on that. And, of course, your E-minis kind of telling that same story right there. There we go. Broke down below that wave circle 4. So, again, first clue that maybe that wave 2 may be complete, but we have to see a breakdown below wave B support at 42.63.25. 42.63 and 25 cents there. 0.25, I say cents. But 42.63.25. Breakdown below that's going to add confidence to the count. But, we've done the first step, which is breaking down below wave circle 4. So now we need to have follow through down there lower. So, I did talk about earlier this week, at the end of last week, I talked to us, said, it looked like we're going to have an up week, a bounce, a rally this week with the stock indexes, and that's what we got. And so now we're going to look about coming into next week, see if we can get a reversal and head on down, make new lows this next week potentially, especially with that jobs data coming off there. We'll let everybody kind of absorb what all that means and kind of figure out what they think that means and then have them position themselves. So we'll see. All right, guys. Anyway, I'm going to get out of here. I hope you guys really have been trading all right. I hope you've been staying safe out there, not going crazy if you're inside a lot more than you're used to. Good. Thankfully, this whole pandemic thing is now, and we've got FaceTime and all this other video chat and whatever, so we're not really ever alone. I would have hated to have had this happening, 30 years ago. We didn't have this technology. But, hopefully you guys are staying safe out there. Like I said, pay attention next week for the launch of TexasWestCapital.com and that signal service done right. It's our TWC long money calls. That's what it is, service there. It doesn't mean we're only going long, but it just means, hey, I'm long money, right? I'm not bearish, I'm not bullish, I'm long money. Whatever way the trend's going, that's where we're going to go and make us some money. So we'll talk more about that next week. Until then, you can still join us at howtotradetowin.com, and we'll just transfer you over to the new site when that goes live. But yeah, that's kind of where it's at. I hope you guys have a fantastic weekend. I hope you guys trade safe, stay safe. As always, remember the only thing that you control in the market is how much you lose. That's absolutely it, guys. I cannot stress this enough. You can learn all this that you want here, all these different ways to read the market and to trade it. But unless you really understand proper risk management, it's not going to do you any good, because you're going to be emotional and you're going to put yourself in bad situations and take trades you shouldn't take. Or you'll take trades that maybe you should take, but you're wrong. We get wrong. And your risk management is not there to protect you from it. So whatever else you do as traders, guys, don't forget, risk management is where it's at. It's where you make your money as a trader. So it deserves more of your attention than anything else, all right? All right, guys. I really hope you guys have a great weekend. You trade safe. And if I don't see you over in Discord, I'll see you on Tuesday, 11 a.m. Central Standard Time. And we'll see just how well, Bitcoin did this weekend, cryptos did this weekend. See if we get stocks turning down lower again next week. I'm going to do that, all right? Y'all take care. Hank, be safe out there in Thailand, man. We'll see you all later. Take care.